All right, good morning, everyone. I'll call to order the Audit Committee, meeting of June 28th. Madam Secretary, you want to do the roll call?
Sure. Bernie Rosen, Chairperson.
Here?
Mark Kaplan.
Here.
Michael Spitzer.
Here.
Bud Larson.
Here.
Representing Controller Scott Stringer, Michelle Mark Levine.
Here.
Representing Public Advocate Letitia James, Umair Khan.
Good morning.
Representing Mayor Bill de Blasio, Nicole Fleming. Here. We have a quorum.
Okay, fine. I'd like a motion to accept the draft minutes of our meeting of May 25th. Do I hear a motion?
I'll make that motion.
Second.
I'll give you a couple of changes.
Yeah, I have some changes. Okay. So we'll accept them subject to maybe some grammatical changes. I guess the first agenda item is the deferred compensation plan. Would you be, for the record, be kind enough to introduce yourselves?
Joan Barrow, Chief Accountant.
Beth Kushner, Deputy Director of Administration.
Okay.
Warren Rupel from Marks Paneth.
Ed Chen, Marks Paneth.
Okay. You will have a statement, dear, or you?
Yes.
Ms. Barrow? Okay,
Yes.
then I'll ask some questions.
In 2016, the 30th year of the 457 plan, the 15th year of the 401k plan, the 11th year of the NICE IRA, and the 10th year of the 401a plan, the combined net position exceeded $17.5 billion, and this was an increase of $1.62 billion over the previous year. This was mainly attributed to appreciation in fair value, which increased from $46 million in 2015 to $1.4 billion in 2016. There was a net increase of approximately 10,000 participants during 2016.
That's it?
That's it. Yeah.
Before I get into the report, and I'll turn it over to any members of the committee, just if you have anything, I noticed, Warren, that your firm did this a little different than a management letter, where you're discussing the data processing facilities.
Yeah, it's basically the same as a management letter, except the only comments we had were technology related, so it's in that format, which is a little bit more descriptive than a typical management letter.
It's amazing the amount of servers and this. I mean, it's really quite an operation. I remember 30 years ago when we were trying to get the 457 plan off the ground, things were different. All right.
I remember 30 years ago when the first balance sheet, I think, had $250,000.
Yeah, it was.
I can't remember 30 years.
I'm sorry. And Ms. Barrow, what was the outfit that went bust that time?
Mutual benefit.
Yeah.
We actually,
I was in budget, and the gentleman who represented me called me on a weekend. I said, you had to call me on the weekend to tell me this? You couldn't have waited until Monday? And I think he described the thing they had bought like a bullet or something. I said, they should have shot them. You should have killed them all. But one thing, I remember the whole industry got together, there were many people besides us, and they really bailed out the thing.
yes, in the end, we didn't lose
We didn't lose anything,
lose
which is
anything.
amazing. I mean, it's still the 457 plan that's the biggest.
Yeah.
No. And still, most of the people take the stable income fund. That seems to be the big one.
Yes.
I remember when I did a little work in the MTA after I'd retired on small cap stocks. They were a lot of fun, but they could kill you or they could make you a lot of money. And that fund did very well. as did your mid-cap, but they were really, the small cap did well. And I remember one of the advisors telling us, after a while, the small cap equity, if it does well, becomes mid-cap, or, it was really something. But, no, as I say, what was it? Not the cash. But most of the assets and most of the funds available for, future retirees are in the 457 plan. That's over 14 billion of the 17 billion, is that it?
Yes.
It's amazing it's doing that well. And in reading, I noticed that you permit borrowing sometimes. I remember when we first started, it was very difficult to have people borrow from it. There had to be a hardship. There was,
Loans at that time were not permitted.
I'm sorry, dear?
There were no loans from the plan.
In other words, things have eased up a little bit.
Yes.
I say with that. The only thing I remember also was when Mario Cuomo, the present governor's father, was governor. He wanted to do something for the managers in the state, and I think he retained Mercer Consulting, and they said that you could do a 457 plan. So then it was just for managers, and then it was extended to uniform force personnel, and then to everyone, which is fair. I mean. And we couldn't take advantage of the 403B, which the teachers can, or which people in the health industry can. So it was good, and it can provide another benefit to a pensioner. I really don't have much here. I think.
I have some.
Yeah. What do you have? Some of the cash questions?
No, I have some. If you turn to what was signed, it's on page 9. It said. It says we believe that the comprehensive annual financial report is accurate in all material respects. Don't you want to say in accordance with GAAP? You don't have a standard here. Hold on. You don't have a standard.
We can add that.
I think you might want to think about that, otherwise it doesn't tell you anything. Then, hold on a second, I've got a couple more little things here.
While Mark is turning his pages, Warren, but you people were satisfied with the data processing facilities and with the servers, and with the security?
Yeah, I think we had no new recommendations for this year. We had a couple of recommendations that were carryover that were really things that one is waiting for a system to be updated, and the other one is in process. So we really don't have serious concerns there. And their data processing is kind of tied into Do It also. It's they're not exactly on a standalone basis. A lot of their policies.
Okay, so they use the Do It facilities.
Also, all the record keeping is done by a third-party administrator.
No, that I know.
So there's no financial data that we're carrying on site.
Who do you use as your third-party administrator?
It's called Empower, which is also FastCore, Great West Life.
I was curious about another thing. When all these footnotes are here, are they substantially the same language as last year?
Yes.
Any significant changes?
No.
The one change was just in formatting on the fair value tables, because I know this came up with the committee last year. We kind of took some of the verbiage out of the tables and put it as the intro to the paragraphs. We're able to save about 2 pages of footnotes by doing that. So.
Okay, no, I'm just curious as to were there any substantive changes. And then you're missing a capital D in the city of New York, which is a great tragedy.
Excuse me.
There is something on page 34 where the stable income fund appears to have investment management fees of $12 million, if I'm not mistaken, on a total value.
No.
That's the appreciation. So the total, when I first looked at that, I compared the 12 million to the prior column, and I realized that's not the comparison, it's the gross assets under management. And from the standpoint of a reader, you typically are interested in the percentage of the assets under management that get paid for the management. And to show that the appreciation and the management fee against that is not something I'm accustomed to seeing. Am I wrong? Usually you see it as a percentage, 0.5%, 30 basis points.
Well, we do have that also.
I know you do, but it's I wondered why you thought it was, well, all right.
Well, Mark, this is just trying to show the component of net investment income. So
Okay.
Okay.
that's the purpose of this note.
I didn't realize that until I got later on. I realized that.
Your management fees are quite reasonable.
Yes, they are, because
Yeah.
most of our funds, or almost all of our funds are institutional or commingled funds, in separate accounts.
Do you lend securities?
No.
No.
Why not?
You ask that every year.
Why
I
should
know I
they?
ask. It's a few basis points
The
every
board made
Nah,
a decision
you
after
don't need it.
2008
It's
to leave the
It's too
securities
much of a
lending
headache.
program. Remembers.
Now, when we get to the foreign currency risk, you focus on the underlying portfolio that investment, page 38.
38?
There is a risk when you invest in
Because
foreign
time.
securities, but there's also a risk where you have an American company
Yeah.
which has a tremendous amount of its income offshore, and you can find a situation in which it may be a domestic company, but 80% of its income is generated offshore, and therefore it's at risk for foreign currency. You don't describe that here. I don't know if you have any of those things, but I would guess that some of the investments are in enterprises which have currencies within them.
Yeah, I mean, this is the disclosure that's required by the GASB.
I understand.
And to try to, I don't know how you'd parse out, I don't know how you'd know for the domestic
I've
corporation.
seen
Yeah.
an occasion saying that there's the risk that you describe here, and the risk that's foreign currency issues are buried within the investments without quantifying.
Yeah, I mean, there could be a statement added
Yeah,
to that
because you see
effect.
some companies that announce that their results are affected by adverse currency shifts where they haven't hedged.
Most of this is in your international equities, I guess all of it, right? The foreign currency?
It could be in some of the other funds, but yes. it would-
Oh, yeah, you may have some of the smaller ones too, all right.
But it would mostly be the
most of it, I
international.
think, would.
So you want to see language added there? Or you-
I only raise it with you, it's up to you.
I think makes sense.
I saw one where one of the investments reported a major effect from foreign currencies, and it was big enough so that they found it wise to put it in the disclosure.
I'm just curious, maybe the question is for Mrs. Kushner. How many employees are in the deferred compensation? You know, city employees?
Staff or participants?
No, just the people administering it.
Was it 11? Remember how many? We wear so many hats. It's about 15, maybe.
15?
Mm-hmm.
Uh-huh.
City staff,
I'm sorry.
the city staff.
Okay, it's not much at all.
If you don't mind turning to page, let me find it here, page 42, there's something in here.
Forget it.
You've got a sentence that probably needs some work. It says, footnote 2, the planned custodian Bank of New York Mellon calculates the NAV based upon the market value underlying securities in the bond fund.
Which note you reading?
Note 2.
Note 2.
It starts off by saying the bond fund is calculated, it's the value of the bond fund, isn't it? Not the bond fund itself, is calculated at net asset value. And then, a couple down, the same thing in 5, you say the mid-cap equity index fund is calculated at, it's the value of that. You're missing some words there. That shows up in a couple of places. Am I not talking well into it? Sorry. Okay.
Thank
So,
you, sir.
I'll give you this, it's got some scratch marks on it. A couple of capital letters would be helpful.
Okay, thank you.
Bernie?
Yes, Mr. Khan. Oh, Michelle, I'm sorry.
I am looking at page, hold on, I just flipped away.
One
Page
question, please.
23. And I'm noticing that for the
Oh, well.
401A plan, we're actually paying significantly more in investment fees than our annual contributions. I'm just curious if you could comment on that. Right, on the bottom of page 23, we're saying the contributions have been 23 and 24 million for the last 2 years, but the investment management fees have been 33 and 36 million. It seems like, I mean, our market appreciation has sort of saved the balance, but is it,
The contributions are from a negotiated amount, a collective bargaining agreement. So that is a city contribution. It's not from the participants.
yeah, no, I understand that, but we're still essentially paying to have this plan. Is that, I mean, we're paying, we're funding things that aren't going to be benefits to the participants. So, just as a policy matter, maybe.
Yeah, I'll take
think
it back
about
to
that.
our agency and talk
Thank
to my
you.
commissioner.
Thank you.
Just to follow up on Michelle's comments, I mean, I see that the cost, the fees have come down a bit. Is there an explanation for that reduction, which is a good thing, but perhaps there could be greater reductions in those costs?
Which fees are you referring to?
For the 401A plan on page 23, so in 2014, 2015, the fee was 36 million. And then it was 33 million in 2016.
36,000.
36,000, I'm sorry. So, but the reduction in that, could there be additional, is there?
The funds that are used for all the funds are the same, for all the plans are the same. So the fee schedule is, across the board for all the funds.
Okay.
That makes
And-
Now, wait, that doesn't make sense to me, because typically fixed income gets a lower management fee than equity-related funds in the marketplace. You pay
Right,
less.
but the participants are invested in all of the investment options. So the fee went down because I believe, was it the social responsibility fund that went down? One of the bond fund, yeah, the fees went down for one of the investment options. So everyone experienced that decrease.
All right. And going back to the foreign currency risk, how is that managed? On page 38.
What page are you on, Mr.?
38, Mr. Chairman.
Okay.
That would typically be done by the investment advisors.
By the investment advisors and the managers, the board has an investment policy statement as well as guidelines that are issued to all the managers. And we have consultants that are looking at that on a regular basis.
No, so I understand that your IPS has that provision to have foreign currency risk. But I was just, so is this an aggregate of the different pools, or how is this managed?
I'm not sure. We'd have to get back to you.
Okay.
We'd have to talk to our consultants and we can get back to you.
Thank you. I mean, and also just what is it an active management? Is it passive or?
Depends on the fund.
Okay.
Most of the funds are passive. We have 2 active funds. We have The small cap and the international are active. All the other funds are passive, and the social responsible fund is active.
Right. The reason I mentioned that because
Stable
of
income fund is
the
active.
level of fluctuations in currency markets, one global event or one event in a removal of a head of state or corruption scandal, which has happened in a number of these countries, and we could lose a lot of money depending on how that is managed.
Okay, we will reach out to our consultants and get that answer for you.
Thank you.
As they say in the courtroom, no further questions.
I'll ask
You're
a
a good straight man.
foolish question maybe, but in your investment management fees, New York Mellon is included in that number.
The
The
custodian?
custodian.
No, it's
The
different.
The custodian is a separate fee.
Separate,
I'm
right.
sorry?
The custodian fee is separately listed.
Separate than this?
Yes.
That's very different service.
It's a completely unbundled program, so the record-keeping fees, the custodial fees are separate from the management fees.
All right.
It's very transparent.
Oh, that's a wicked word.
Are there any more questions?
No, sir.
No, okay. Thank you. You send a copy of this to all the participants in the funds, or no?
We put it up on our website, and we tell them on their quarterly statement that it is available for viewing and download.
Okay, that's fine. You've come a long way. I remember that.
Thank
Very
you.
well done. A nice set of statements. Very good, Warren.
Thank you.
Thank you.
Thank you
I'll
for
give it, I'll
coming.
walk down.
Don't throw it. He'll come around. What do you want to do next here? What do we want to do next? HHC, okay. It's true. That company, because the insurance company went bankrupt. The seller closed. She called me on the weekend, and she had to call me on the weekend to tell me. Couldn't wait till Monday, so you have to know. So you will. Now I know, big deal. And they called it a bullet when they went to shot that one witness. The company has a knowledge. It is one, but the industry got together.
You got outvoted, Mike.
Okay.
Made good.
Crank up the AC.
Joan, you'll give regards to Georgette. All right, thanks.
What's next? Which one's next, Bernie?
HHC, are you comfortable with it, Mark?
What?
HHC?
Am I comfortable with it? Oh, you
No.
want me to do it? Yeah. No, I'm
I have to recuse myself. We'll deviate a little bit from the agenda, folks, and the next set of statements is the Health and Hospitals Corporation. And I am a member of the board, so I have to recuse myself, and Mr. Kaplan, and the other members can all chime in. Where is Bud? Oh, he's over there. What? Okay. Could you people be good enough to introduce yourselves just for the record?
Thank you. My name is P.V. Anantram. I'm the Chief Financial Officer for the Health and Hospitals Corporation. To my left are the KPMG engagement partners, Maria Tizo and James Martel. And on my right is the corporate controller, Jay Weinman, James Linhart to his right, and Joseph DeBroya.
Okay, thank you all for being here. How
So-
are you?
Shall we, Jay Weinman will walk through some of the financial highlights of our 16 closing statement, but I wanted to give you an introduction to Health and Hospitals. Clearly, you all know we are 11 hospitals, 70 clinics. 5 nursing homes, and we have 60 NTCs. The bulk of our resources and revenues come from government partners. We are most of our business is in Medicaid and Medicare. Patient services revenue is about half of our overall budget. A significant piece of the revenues also come from supplemental payments, and with everything going on in Washington, there's always at risk. We struggle on a daily basis to make our books, but we have done very well. 16 was an improvement over 15, and we have significant efforts underway to improve our financial conditions. With that, I'm going to leave it to Jay to sort of introduce the 16
You have it, won't you, Walt?
numbers.
I will go ahead. Please.
Good morning. KPMG completed the audit with an unmodified opinion. Overall, the system's net position increased by $78.6 million in 2016 compared to last year of $76 million decrease.
Speak into the mic, please. Thank you. Thank you very much.
Is this good?
Yeah.
I didn't think it was on. The current ratio has increased slightly to 0.95 from 0.84, so that's an improvement. And the net days receivable, which is a measurement of how fast we collect cash, dropped significantly by 16% to 51 days. And the average for New York City is 71 days, so we improved that quite a bit. Highlights of some of the significant variances, since you have the MD&As, I'm just going to briefly go over some of the more significant areas. Grants receivable increased approximately $118 million. That's due to recording disrupt funds of $73 million, and $20 million in 15 was for FEMA, and we didn't have that again, so that increased or decreased the grants receivable. On the other side of the on the financials, there was a increase of $164 million in grants receivable, and that was because we had interim access assurance funds received of approximately 140, and 30 million decrease in disrupt funding. Pools payable went from 452 million to 309 million, a reduction of 143 million. And that's because Dishmax payment advances dropped by about 138 rather. Due to the city, decreased about 277 million, as the system paid malpractice and debt service for the previous year. And in 16, there was no increase with an agreement with the city. Pension and OPEB, which represents together about $684 million in expense and just over $1 billion in liability, continue to be reported based on the reports by the City Office of the Actuary. In PS, was salaries increased by 6% due to collective bargaining of about $68 million. And we took on the correctional health service, which increased it by about $34 million. And there were some increases in FTEs during the year that we eventually reduced back to the limits, or the amounts that we had at the end of 15. But there was some increased cost of about $40 million. If we took out the collective bargaining and correctional health, increases were just less than 2%. And the OTPS increased 6%, primarily due to the addition of correctional health, which was $155 million. So those were the highlights, and I guess I could open up to questions.
Questions from anybody on the committee? Michelle?
Hey, so I'm going to start with just some sort of annoying picky points. One is that...
What page, Michelle? So that
I'm just starting with some picky points. So if you look at your financial statements, best example, page 14, you have unreadably small type and also a lot of blank space on the page. So it seems like you could solve both of those problems. So if you could just work a little harder on the formatting, that would be much appreciated.
I think that one we can solve.
Thank you. I figured that's an easy one. And then I guess I wanted to ask you about the, overall financial condition of the corporation, which I know has been, an issue of great concern. And a couple of years back, you had some liquidity concerns. I'm just curious in terms of what your plans are to deal with some of the difficulties.
So about a year and a half, the mayor issued a plan to address the fiscal deficits in the corporation, starting with in 17 a plan to reduce our or increase our revenues and reduce some spending to the tune of about $780 million. And in 18 it was growing to 1.3, and we get down to 2020 it was about $1.8 billion. Almost all of those deficits were created by the fact that there was in the old Affordable Care Act a provision that would reduce the allocation to the corporation for bad debt and charity care pools. And with this new administration, things get a little bit more dicey, and there's a lot of moving parts in it. I'm happy to report that on the $780 million that we had as a deficit reduction plan for 17, we actually did better. And this past executive budget, about a month and a half ago, we reported that we had made close to about $900 million against the 780. So what is nice about this setup is that there is a significant participation by the entire workforce towards addressing the deficit. We have to date reduced our workforce to the tune of about 3,000 people since its height in November. We are working diligently to improve our revenues to mitigate some of the losses that we see in our supplemental pools. As we move into the next couple of years, we are implementing significant information systems that allow us visibility across the system. For example, we are rolling out a budgeting, accounting, and supply chain function through enterprise resource planning programs. In a year and a half time, we will have an automated payroll system mitigating or eliminating the need for paper records that we currently still have. We are enrolling an electronic medical record system called EPIC that will be about a year and a half through implementation. We'll begin implementation in a year and a half. We're currently doing the build for it. All of those things put us in a position that allow us to manage better, understand where our costs are across our system. You probably remember we used to be structured as networks. There were and this is well before my time, but there were like 5 different networks, and they all worked in their own operations. There are merits to those things in terms of creating competition among them, giving them a lot of flexibility and decision-making authority. We have since moved to a system of acute care hospitals, post-acute care hospitals, and both of those have senior vice presidents leading it. So there is a structure that looks at operations from a standard perspective. We are engaging at every hospital level to standardize our operations and patient registration all the way to clinical care, looking at the centers of excellence so that we can concentrate clinical services to provide better services and also reduce costs. So there's a lot of work happening. That is not to say that we will overcome all the challenges out there, but it definitely puts us in a much better place to address those challenges. So,
Thank you. Actually, my next question was going to be about some of those systems. I've heard a little bit about them. I'm curious in terms of what consideration you gave, especially to the HR functions, of piggybacking on any of the city systems.
So the corporation had already purchased the HR system for PeopleSoft a while ago. This was the decision made around 2 years ago that it would be more appropriate to use the timekeeping function within PeopleSoft since it had already been procured. The rules on the payroll system are essentially migrated from the city system because most of our workforce is similar, and so that gave us the advantage of the city having done this work before. So we got to piggyback on those things. but essentially the reason to go with PeopleSoft had been because it had already been procured, and the system, the HR system, is already in play. All our hiring authorities and other HR functions are already into the PeopleSoft system. The PeopleSoft system also has these other modules that allow for supply chain, accounting, finance, budgeting, which are all rolling out as we speak. In July 3rd is when it's supposed to go live. Payroll will clearly follow a little later. Accounts payable and supply chain roll out in 4 different waves. But those were the reasons why it made sense to be in an integrated space.
One of the things I've learned from my colleagues around the country is that ERP system implementations are notoriously difficult and prone to disappointing results. I'm just curious how you feel it's going and what steps you've taken in order to try and best mitigate the risk of failure.
So you're right. Besides ERP, every IT system is sort of a black box that ends up thinking that everything is going to be perfectly fine on the day it's supposed to go, and something or the other always breaks. And I'm sure that we will be on tenterhooks for the next 2 weeks on this. But we have created sufficient backup systems in place, a significant amount of rollout resources. The year into the build and the implementation has been a very structured approach with a governance committee made up of the supply chain people, the finance people, and the IT people all working very closely to ensure that everything is done. We have engaged Deloitte to do the build and the rollout. We have, over the past 2 months, engaging people in training and user acceptance. This last week, we've been going around to the facilities that are going to be in the first wave of implementation, rah-rahing the groups, and we find the amount of benefits that we expect to get out of ERP are so significant, given where we were, that I think everybody's excited to go forward. I'm certain something will
Go.
You know, Michelle,
Good.
you're right.
What-
I sit on another board where we're going through the agonies of being late on our financial statements, hiring extra consultants to do the work that we thought the first consultants were going to do. And it's a much smaller system than this, but we've had nothing but nightmares. And the audit committee meets now every 2 weeks for its sins. So I hope that you're right. But I agree with Michelle that the learning out there is not comforting.
If I had been planning on sleepless nights, you definitely made that even better. But we definitely we put a lot of effort into touching all the pain points and making certain we've got it all right. And of course there are manual processes in play also. So to the extent that something doesn't go well, we definitely have staff on the ground making certain of those things.
Good.
So,
My very last comment is, you might notice that of all the entities today, this is the only one that I have a paper copy for, and that's because you lock your financial statements, so I can't put my notes on them. So please send unlocked versions of the PDFs. Thank you.
will do.
You made.
Go ahead, Mr. Khan.
Oh, go ahead.
Thank you.
Did you want?
No, go ahead.
Go ahead.
You can't do this, remember?
I can't. I can call out people. I can't ask questions.
Rest assured, the chairman is not censoring my comments.
No.
So thank you for your explanation to Michelle. One thing I missed in your explanation was the ambulatory outpatient infrastructure and how we know that there's declining inpatient census, length of stays, and to compensate, and also reimbursements declining as a result of that, but also penalties for people the longer that they stay in inpatient. So I didn't see anything in here as far as what was being built. Nothing certainly in the capital area of building outpatient ambulatory care and care coordination. I know that you've been working on building an Epic for some time now, but I did not see anything here about that outpatient ambulatory care. And also, I'm glad we now have a controller in the office. I know that was a comment that was made by our auditors. So if you could explain that a bit.
Right. So besides having a controller, we will have a better financial system, hopefully, when we do the fiscal year 18 audits. So, but you're right. On the ambulatory care, and I think I touched on this the last time I was here, the future of healthcare reimbursement keeps shifting every time you think you've got it set. The system at one point in time used to be a complete fee-for-service system and has since moved into managed care for the bulk of its population. And even in managed care, it's sort of a risk arrangement. So it behooves us to ensure that our patients are cared for better and use our facilities less so that we get to avail of the risk surpluses that we have now with Health First and Metro Plus. As part of that entire strategy and the recognition that people don't need to be in hospitals for a lot of the reasons why, and because hospital care is expensive, we are working on expanding our ambulatory care sites. We have already renovated a few of our existing sites on the satellites, bringing them all under the umbrella of what we now call Gotham, which is essentially our FQHCs. And we have submitted and received approval for all of the DNTCs to be converted into an FQHC status that gives us a premium bump of about 20%. And that's good news. Given now that we are collaborating on all our ambulatory care sites, the care management can be done better. I'll get to the care management piece in a minute, but in addition to all of that, we are on course to open in the next couple of months in Staten Island for a large clinic, the Vanderbilt Clinic, and we have plans in play for another 3 clinics soon. The future of our healthcare system is going to be more on the outpatient side and care at home. So when we have Epic, we think about telemedicine, we think about ongoing case management services, and a big part of that is our efforts through what we have created as an entity called One City. It's essentially the program run out of with district funds. And the big focus there is to increase our care management resources significantly and roll them out across our systems. And I resist giving you a number, but it is in the hundreds, if you will, because we're still working out plans and the hiring process and figuring out who currently provides those services and how they can be relocated and things of that nature. But the idea there is that every client who visits a hospital or has chronic diseases will have aftercare and follow through on a care management basis so that we can intervene well ahead of their need to be hospitalized. So it's all underway, and we expect that optimistically, I would say within the 6 months we should have care management plans rolled out to the facilities.
Okay. I mean, I just mentioned this because in central Brooklyn, for example, the governor and Northwell did their report, as you may know. Just for central Brooklyn, they're going to build 36 outpatient ambulatory care facilities. And I haven't seen a vision yet from HHC, New York Health and Hospitals, for something, for their vision, for how they're going to deploy that, because you're talking about the risks. We know for certain that we're going to have less federal support, irrespective. Mm-hmm. We're going to have an aging population. Mm-hmm. We're going to have as many seniors in New York as we have children 10 years from now. So how is HHC planning on taking care of these New Yorkers given these constraints?
So you may be right in our not being as public in our rollouts of our primary care clinics. The mayor has definitely been out there. In fact, the first time around when we put out the One City plan for health and hospitals, it included a significant segment talking about our ambulatory care efforts. And there has been investment made from the city side on capital investments to promote new clinics. Siting and locating these clinics are not always easy. Right. We have to figure out where our future needs are going to be, so that there's a whole process that is going on. in that vein, and then I'm sure we could do a better job publicizing what it is that we are intending to do. But bringing all of the clinics under one umbrella allows us to do better planning on that
I
front.
just have two more questions, Mr. Chairman.
Yeah.
Go ahead.
Also, with regards to, I know that I heard that there were some cuts where some physicians were being let go at the Carter facility, and the explanation that was told to us was that physicians are affiliated and are listed under as PAGNY, and thus they're not union, because the mayor made comments that no union employees would be let go during, this restructuring. And so, is that your understanding, that physicians who are under PAGNY are not unionized and thus may be released or let go?
I'm not entirely certain
Okay.
of that situation and the relationship to the union affiliation issue. It's a recent matter. I've not been close to it, so I can't
Okay.
give you a clean answer on it.
Because you mentioned you had 3,000 fewer employees now.
That's true.
So I didn't know if physicians were within that categorization.
The changes that we've seen in our 3,000, in the number of people that we don't have, our FTE counts that include a reduction in overtime, reduction in hourlies. I don't recall in those numbers seeing any decline in our physician population. In fact, we've worked very hard and diligent to ensure our clinical care is appropriately poised to serve all our patients.
Okay. And just the last question. So in your financials on page 11, in 2016, you've sought some private financing. Could you go in a little more detail as to why you sought that, since?
If I recall this was short-term debt with TD Bank and was it Citibank and I forget, JP Morgan. And those were very small amounts. I think it was about $50 million each. And it was just around the time that we were looking for short-term financing to roll out our infrastructure for IT equipment and things of that nature. So it was very small. Since then, we have now relied on the city to support our debt. So if you look at our latest capital budget, it has a significant increase over our last capital commitment plan. So about $2 billion over the 10 years is supported by the city.
Okay. And so were these paid off, or?
No, they are rolling accounts. So they're in fact they're not completely used up yet. We've been trying to limit its usage as much as necessary, as much as possible, because the debt service on these are of a shorter nature, and I prefer to use long-term debt more.
And
cheaper.
and I would imagine that using city money is cheaper than using private lease money.
It's free to the health and hospital system.
Right.
There was a comment in the opening statement that sounded like an improvement, which was the period of time for collecting bills outstanding, which was improved. I wondered if you might expand on that a little bit. Is that because of some initiative, or is the mix of the bills changing, or there's some other dynamic there?
So there definitely has been, what Jay alluded to was our efforts in 16. Since then, we have put in a lot of efforts to ensure that our billings get done on a more timely basis. We have metrics that we distribute to the various facilities so that they have an idea as to how much their AR is on a regular basis. And beyond the improvements that we saw in 16, in 17, we actually saw a further decline in those AR days. So there's a lot of work behind collecting every dollar possible. On the other hand, in terms of cash management, we are also being very prudent in the bills that we pay. So,
Is the percentage of collection changing?
on a cash basis, our weekly Medicaid checks used to be about $18 million. It's now around $21 million. So,
And you made reference to being better than New York City. I assume you meant the other other hospitals in New York City. Is that what the reference
Yes.
was to?
Yes.
Okay, thank you.
there is there is a cautionary note there because most of our business is Medicaid and has less constraints than you would in a commercial business setup because the commercials tend to pay less or rather be more reluctant in paying
You're
upfront.
talking about private insurance and
Yes.
more fee-for-service.
Yes, that's correct.
Okay.
Yes.
Any more questions? I have.
Yeah, I think, go ahead.
Go ahead.
Michelle was, wait.
No, I defer.
I just had one quick request.
Gonna be a late-
Throughout your MD&A, you occasionally include both dollar and percentage changes. It would be great if you would do that consistently. It makes it much easier to understand relative to your size how much. Thank you.
Good point.
I'd like now briefly to turn to the, what I guess is the management letter. There's a reference here to the 990.
I have,
You have the same thing? Go ahead.
well, yeah, what I don't understand is, and I guess it gets to the comment, you started off by saying they're prohibited from political activities or et cetera, but there's no mention about that. So I don't even know why you're drawing attention to political campaigning or lobbying efforts. And then you go into the fact that the Gotham Health lost its tax exempt status because of failure to file the 990 forms. Now, I don't understand how that could happen and why the audit it's not on an auditor's checklist that are the proper tax returns filed.
I can touch on the 990s for Gotham. There was a significant staff turnover around the time that we made the application for Gotham for the FQHC status, and clearly it fell through the gaps. We have since caught up and made certain that all of those things are appropriately filed. So,
Before you get off the 990, oh, go ahead.
Yeah, no, but
Keep going, Mike, I'm with you.
yeah.
I guess my question also gets to the auditors. Why wasn't that pointed out? Why isn't this on a checklist that all the proper tax returns are filed? You check out to make sure the 941s are filed, which are payroll, et cetera. But a tax return, I don't understand.
Let the auditors answer.
So our, can you hear me?
Yeah.
So Gotham is not part of our audit of the corporation. It's a separate
It
entity.
might not be you, but any
Yeah.
auditor,
Yeah.
they're audited.
So, Jane, you know.
It was most certainly
Who
because
audits Gotham?
it doesn't have a separate audit structure to itself.
So they're not audited at all?
They are audited as part of the corporation's books as a whole.
But to take Mike's
Well-
point, it says Gotham's management worked with KPMG
Actually,
to
Go ahead.
file a 990. So KPMG must have been aware of what was going on.
So Gotham is not a consolidated entity. It doesn't get reported in our financials. It is a separate, non-subsidiary of Health and Hospitals. So, and I wasn't here at the time, but I think it probably did fall through the cracks, and the 990 missed its deadline. But we since got authorization, to extend that. We will file the 990 on time.
Well, there's another element to the 990. You are supposed to show it to the board of directors of the organization. Was that done for the Health and Hospitals Corporation?
I don't recall the 990s being presented to the board, but there was definitely a budget presentation of the inflows and outflows to the board of
Let me say,
Gotham.
pick up Mike's point one step further about the auditor. Every organization I'm involved in, and there are lots of them, which are not-for-profits, the auditors want to be advised that the board has looked at the 990, made it available. I've forgotten the exact language.
It's a question on the form.
I will say this, that the last, I would say 14, 15, 16, we probably filed for FQHC status and the structure of Gotham around 14, fiscal year 14. And since that time, getting approval, setting up the board, the significant staffing turnovers in the senior leadership of the corporation have all affected that. I can assure you that moving forward, we will be in sync with all of those items. I can't, at this point in time, answer all of your questions. I can go back and investigate and get you an answer if you...
Because are you aware that if you lost, has Gotham received any private contributions from individuals that you might even respond?
None that I am aware of. Gotham, as it is currently set up, doesn't have any assets. All of the assets for Gotham essentially are the health and hospitals assets. So there is very little of revenue generation that works within Gotham itself.
So they got no private contributions?
None that I'm aware of.
Because I would look into that, because the people that might have taken a tax deduction for that it's not allowed now.
So we will definitely look into it and get you the answer.
Just to help me, because I'm a little confused, is this within KPMG and the HAC audit? Because it seemed to be like two different answers here.
No, and maybe I could clarify this
Yeah,
just a little bit
please.
more, because, and maybe KPMG can help me. In the FQHC arrangement, there's a co-applicant and there's a sponsor. And I think it was,
FUHC?
The Federally Qualified Health
Why
Center.
don't you define some of the terms? Go ahead.
So
I'm an expert in acronyms.
it is a non-consolidated entity. It is not not a subsidiary of Health and Hospitals. So it is separate and apart. They don't have a bank account. There's no contributions. There's actually nothing running through it except for what we allocate from Health and Hospitals to the corporation and back to the corporation. So that's the way it was set up, strictly to provide the guide, the regulatory guidelines, to set this thing up. So really, it's a matter of regulation that it was set up, but all the revenues for the FQHC run through Health and Hospitals. Any contributions would run through Health and Hospitals, and there's really nothing going through
So it
Gotham.
should be part of the regular HHC audit to check this stuff.
Well, it's not a consolidated entity. It's not a subsidiary.
So let me just clarify.
Yeah,
So
please.
this entity is not part of the required scope of the deliverables that we're supposed to be auditing. The way this comment came up is that actually management told us the whole issue that occurred here, and we had our tax specialists work with the HHC management team to try and rectify the situation. So the reason why it's in here is to let the board know that the management team of HHC needs to be on top of their 990 filings for any affiliated organizations that are not even part of the controlled entities of HHC. Okay, so again, this was not part of our audit.
Okay.
Okay.
Then help me out. Prospectively, will it be part of the audit in the future?
No, unless it's part of the request for proposal.
The entity was set up primarily to achieve an FQHC status. There is a requirement that the governing of all of the policies of Gotham have to have private patients as part of this enterprise and have an arm's length from health and hospitals. And so it was purely a mechanism to allow us to attain the FQHC status.
I understand.
It's considered a related
But I
party.
guess my question is, going forward, will it be subject to audit by somebody? Will it be in the next RFP or scope of work? Or will it be hanging out here without review?
It's a question we'll take back and investigate.
Let me take,
Does HHC, New York City Health,
Health and hospitals.
I can't
Thank you.
get rid of the old terminology, so forgive me, but does your audit committee review this?
Yes.
And what were their comments?
I don't recall this coming up in that. It might come up as part of our regular audit.
No, because there's lots of questions on the 990. Do you have an audit committee? Do you have a whistleblower? Do you have all these normal, typical types of things?
The amount of revenues and expenditures in that bucket are probably south of 100,000.
Yeah, I'm past that. Forget
Yeah.
that. Because there's lots of questions on the 990, especially for a 501c3.
Well,
Do you have all these? Do you have a document retention policy?
as was, and I should bring the head of Gotham in the next time to talk about
I
some of these
think
things.
we're beyond Gotham for the minute.
Yeah.
Gotham is a tiny little thing, and presumably somebody will take under advisement what the comments from this committee have been, so that it won't be next year. But that leads to the question of the principal enterprise. Is that required to have a 990?
Yes.
The prince.
No,
Health and Hospital is not required
No.
to have a 990?
no.
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 They're a government.
The government, and the reason this one is because it's not the government?
The reason is one is mentioned is because we neglected to file the 990s.
No, you only have to neglect it if you were required to file it. If this was a governmental enterprise, you wouldn't have a 990.
I don't think so.
So why does this one need a 990?
I'm not certain.
Okay, a lot of questions. You
Yeah.
come back with some answers,
Thank you.
maybe.
Yes. No, I mean, it has.
One little sentence and they ought to report it.
Yeah, if you could just
It's illuminating, so.
put together a little of this information and send it to the audit committee secretary,
Okay.
that would be very helpful.
Thank you.
Thank
Could
you.
I just ask a question as a board member, but I don't mean to be out of line? Isn't it true, and maybe the question is for you, Ms. Tissot, isn't it true that in the past, the diagnostic and treatment centers were part of the audit, right?
Yes,
Right.
those are part of, right,
And then
they
you're
still are.
saying that they became federal health qualified centers, they became separate?
No. The diagnostic and treatment centers are still part of the Health and Hospitals license. They are part of the consolidated audit. So the entities themselves are part of the scope of the audit. The separate corporation called Gotham is a separate corporation.
But doesn't Gotham now include the
I
diagnostic?
think we use the term interchangeably. I think
use
Gotham
it
is referring to
interchangeably.
the collection of diagnostic and treatment centers. It's also being used for talking about the actual corporation. And that corporation that was set up, like I said, is not a subsidiary. And we may have to check with legal about the actual legal status of what it actually is. I can't speak to the legal aspects of the entity. I do know that it's non-consolidated, and because we don't report it as a discrete unit or a blended unit within our financial statements, it wasn't part of the original scope of KPMG.
But
And we'll have to check on.
the clinics are still the assets of Health and Hospitals. They're
Yes.
not part of Gotham. They are, the governing policies are purview of Gotham in advisement with us, so.
Listen, I think we've done enough on this one.
Thank you.
You can
We
see
will-
how confused we all are.
We will
We've
we will clarify as much
Okay.
for ourselves and for you.
Let us then turn to the management letter here, because there's some interesting things in here, and I think Mike has got some circles. So I got a couple of little ones. On page 13, you refer to properly reflect full assets on books. What's the concept of full assets? It's the first bullet, last line. What does that mean?
Page.
A distended stomach?
It's a management response.
Full asset on books. I think that just means the asset, right?
You don't know?
Yeah.
Well, when you figure it out, you can come back to me.
Yeah. Clearly, we are at a loss.
I think it's just talking about the asset itself, the asset.
Well, I've never seen the concept before, so
No,
I couldn't figure it out.
Yeah, so the comment's referring to an asset that's in construction in progress. It's not a completed asset put into service.
So it's,
Depreciated.
Right, but they took depreciation
no,
on
I
it.
understand the
Yeah.
concept, but the word didn't tell me
What
that.
fully means that it was fully put into service.
Oh, okay. I thought your comments on 23 were,
Page 23, Mark?
I hadn't seen this for a couple of the major hospital systems in New York, and I thought it was very good. Mike, you had something else? I'm just flipping pages here.
If I could actually ask a question, to
please.
continue to beat a dead horse. because why not? Back to Gotham. So I guess I'm not completely clear as to why Gotham rose to the level of importance enough to be mentioned in the management letter, but appears nowhere in the financial statements, and everybody knows that they don't have audited financials. How is it that your firm was comfortable issuing an opinion on financial statements knowing that there was a related entity, which I don't even know how that entity is truly related to HHC because there's no additional information here on that? And I understand your initial response that you weren't contracted to do the audit work for Gotham, but at the same time, there are professional standards that are outside of what your contract states that determine what it is you can actually issue an opinion on and what you can't. So I guess if you could just maybe elaborate a little bit more on that, that would be helpful.
So just to be clear, Gotham is a not-for-profit entity. It's a 501c3, so it's not part of HHC. It's a related party. So as part of our audit, we look at affiliated entities, we look at related parties. So management informed us about this whole issue regarding Gotham. So we thought it was significant enough to put into the management letter. Again, the management letter, there's no significant deficiencies or material weaknesses. In order to issue our unmodified opinion, which is the highest level of assurance that the financial statements are free of material misstatement, we look at internal controls over financial reporting only. So that's how we issue an opinion. So the fact that this matter was brought to our attention by the management team and our tax professionals had to assist with this whole, trying to square away this whole 990, we felt it was important to put into the management letter. Now, management letter is what we call a critique letter. Observations that we feel would improve the overall operations of the corporation, and we felt that since it was a related party and that 990s, and if you look in the healthcare industry, are very, they're scrutinized by, all the regulatory agencies, especially the boards that have to sign it, was significant enough to put into the management letter. Again, but none of these comments were significant deficiencies and material weaknesses. Again, it was just an observation that we felt was important enough to bring to the attention of the board of directors.
So the city does have a handful of not-for-profits that it reports in its financial statements as related entities via blended or discretely presented component units, et cetera. Does this particular entity rise to the need of a blended or discretely presented component unit, given the structure of the two?
That I can't answer that. Management would have to. It seemed like the operations are insignificant.
So I understand for financial purposes they are insignificant. However, if there are related entities that are not appropriately reported on the financial statements, one would think that that would rise to a comment by the independent auditors in any opinions or formal documentation issued on the financial statements, that essentially management had neglected to appropriately report all of its related entities on its audited financial statements. So I'm not necessarily talking about materiality here. I'm talking about the accuracy of the financial statements having been reported.
You're drawing a conclusion that it should be. I don't think management has gotten to the point as to whether or not it should be included in the New York City. So a question
I'm
has
not
to be.
saying they did or didn't,
Right.
but that having been said, it doesn't preclude the auditors from having a position on being made aware of an entity and then asking management what that appropriate treatment should be, because it is management's responsibility to make that determination, and for the auditors to then take a position on its formally issued documentation in light of that. Management could choose to never address it.
Agreed.
Does that mean that the auditors also get to never address it?
No, I think by the management letter identifying that there's an issue with the 990, number one, brings the audit committee of the New York City Health and Hospital Corporation aware of situation. Management has responded that they would refile the 990 as of December 31st, 2016. An auditor, from a fair representation of the financial statements, evaluates whether or not it's material in terms of financial results, size, control, and things of that nature. So consolidation or lack of consolidation is not determined based upon whether or not it's one item. It's a subsidiary. So we go through that evaluation process. That evaluation process was identified, brought to management. The engagement team evaluated whether or not a significant deficiency or a material weakness was at hand. The way they get around that is by materiality. And would it be misleading to the reader of the financial statements that this information would cause a problem? We've made that conclusion as auditors. That's a judgment call. So as we go forward, though, going to your comment and your concern, this would have to be addressed in our upcoming year. What is the size? What has been done? Have you received a retroactive approval for the 990s and that, so forth? This is a fairly new organization, 2012, 2013. FQHCs are created purely for regulatory purposes to be able to work within the reimbursement system. The assets, the receipts, disbursements are still controlled by HHC through the, New York City Health and Hospital Corporations, through the diagnostic and treatment centers. So it's another reimbursement mechanism that was out there that was permitted by New York State. Your comment is fair, but at this point in time, it really did not have a material impact on the overall. But as Maria stated, there was a problem with the filing, which management identified, which we were asked to come in to assist in retroactively getting it approved, basically fixing it. So I would assume for our 17 audit, not assume, we will, quite frankly, we will incorporate ownership, related party. You know, whenever you have a related party, especially in a governmental organization such as New York City Health and Hospital, it becomes a major issue, conflict of interest, things of that nature. So we will eventually, not eventually, we will go through this to make sure, one, the 990 has been rectified. One would assume if it was filed by December 31st. And then two, are there any others out there? As you indicated, there could be others out there that really need to be evaluated. Without going on, as Maria says, we report on financial reporting. We rely on internal control over financial reporting. We rely on management's representations. We rely on what's written in the minutes and the documentations. Our job is not to be forensic and to go in and test every account, every transaction, every financial statement.
I understand.
Yeah.
But when it's brought to your attention, it is hardly forensic.
Oh yeah, no, and that's why we put it in there, and quite frankly, we put it in there because we were asked to assist. So it's let's make one thing at least clear: management was the one who identified it, good, bad, or indifferent, and we're just trying to inform the governance of New York City Health and Hospital Corporation, but to rectify it.
Okay, you raised a flag that I always hoist in the circumstances, because in the public company context, you might have to answer a question of what happened to your independence when you were brought in to cure a problem. I take it in this context, it doesn't affect your independence?
No, all we're doing is help filing the corporation in terms of going back and doing the tax returns. We're permitted to do that. That's a permissible service.
Okay, so it's limited.
Yes.
All right. When I read the management letter, it occurred to me that 990 was a very small part of the problem here. You've got all kinds of weaknesses that you address in the management letter, which management says it's dealing with. All I can say is that this is a very long, in my experience, management letter dealing with substantial weaknesses in the systems. Are you comfortable that you now have your arms around them all, as it appears from the responses?
We are in a much better place today than we were yesterday. How's that as an answer? And we get better every day. But as far as our financials are concerned, we are definitely much better.
Could I just ask a question? I know I'm not allowed. I recuse myself. Mr. Wyman.
Never stop them.
Does the data include the revenues and the expenses associated with the diagnostic and treatment centers?
Yes.
Yes.
Yeah.
So it does include all that.
Yes.
So the issue is that because we wanted more reimbursement, We began to call them federal qualified health centers, and therefore we had to set up this separate entity.
Yes.
I think members of the board, like myself, don't even know that, but all right. I mean, we know that we hear, we
You're gonna
hear
scare the auditors
so
to
mu- there
death.
were so many acronyms in healthcare. No, there were so many acronyms in healthcare that you can go
Absolutely, yeah.
crazy.
Listen, let us move this along.
I chair the finance committee
Right.
for the corporation, and I really didn't understand this nuance. And, all right.
I think there is definite clarity that we can attach to our comments back to you on the structure of the FQHC and the revenues and expenditures of those.
Okay, now there was one more question here, and then I want to move in my role as chairman pro tem. Move it on.
Are there any other related entities that were not included?
No.
Okay. And because I know KPMG said it didn't fall within their purview, so I'm asking, did you come across any other related
No,
entities?
this
that-
is all we came across.
Okay.
Okay?
And so it says that there was a filing by the CFO of Gotham on November 22nd, 2016. Has there been a recognition or a response either from federal or state, the Attorney General's office or the IRS?
I didn't even know this.
I don't know the answer to that. I can get you an answer.
Bernie, I'm happy
I
to
mean,
give
it's been filed.
Almost done, almost done. And then on page 8 of the management's letter, we discussed the issue of analysis of collection studies and that person having resigned. There's only one person that does that.
I guess I could answer that.
Page what, 8?
8, Mr. Chairman.
Yeah, there had been one person who did resign. We do have one that does it currently, and we are training others to do it. I am in my role as corporate controller. I also created that, so I'm also the second backup to that. And so we shouldn't have that problem going forward.
Okay.
All right. If there are no more comments, I'm happy to turn it back to the chairman for the next one. I will give you this, though, because there are things you want to fix. Bernie, you're back into the saddle.
Mark?
Yeah.
Late last night, I
Wait a minute.
figured,
One more
well, I don't
question,
have
Bernie.
to get...
It's not so much a question, it's more of a comment for our law review editor here.
I'm sorry?
For Mark, I just wanted to say on the management letter, I mean, I thought it says Northern Manahan as opposed to Manhattan. I thought you would have caught that.
What page is that on?
I confess.
On page 4.
And south.
And south. Well, that and Lincoln is in the Bronx, I think, and not in Manhattan.
Oh, my God.
And Henry Carter is in Harlem, not in South Manhattan, as is Metropolitan Hospital is in the Upper East Side.
I cheated. I didn't read these pages. Okay, let's turn it back to Bernie. Thank you all.
Thank you, thank you.
Very fine management letter. I didn't
Thank
have a
you.
chance to go through it.
Thank you.
Statements.
It's 1 hour, Bernie. This was 1 hour.
I told you. Wait till the... Could we take a 5-minute break?
The comments and the semicolons.
We have 4 more entities.
I know, but...
And it's 11 o'clock.
Right, 5 minutes, 5 minutes, okay.
Easter, the President and CEO of the WTC Captive Insurance Company. With me today are Jim Schoenbeck, our CFO, and Todd Biesfeld, a partner at Crowe Horwath, who are our auditors. I'll just give a brief statement, and then to the extent there are questions about the details of the financials, I'll defer those to Mr. Schoenbeck or Mr. Biesfeld as appropriate. WTC Captive is a not-for-profit corporation licensed and regulated by the New York Department of Financial Services. We were formed in the aftermath of 9/11, originally funded with $1 billion from FEMA. Our insurance policy requires that we defend the city and its contractors against lawsuits arising out of the debris removal after the...
Please fix the mic. I'm sorry to interrupt you.
No problem.
Thank you.
And I could probably speak a little bit more slowly. Our insurance policy requires that the captive defend the city and its contractors against lawsuits arising out of the debris removal after the attack on 9/11, and requires us to pay any resulting damages. Since we were last before the committee, we have had 2 new claims filed, both of which are still in litigation. We are running positive by about $3 million through May of this year, with investment income running well ahead of budget and expenses generally below budget. Our audit went smoothly, and we received an unmodified opinion. We continue to provide insurance to the city and contractors in case of future claims. At present, we have just over $291 million in assets invested in fixed income instruments. And that is the general overview. And if there are questions about the details of the financials, again, I would direct those to Mr. Schoenbeck or Mr. Thiesfeld.
Thank you for the letter again on the accretion accounting. It's a
Yes,
little
sir.
different than most accounting. But it has really slowed down.
Yes,
since
sir.
You paid all those claims and...
Well, particularly with the continued operation of the Victim Compensation Fund, which is a non-adversarial way of receiving compensation run directly by the federal government, that has absorbed claims that would otherwise have been brought against our
Well, it will come
insurers.
to you.
Exactly, and that is scheduled to run through December of 2020.
And your charter?
Our initial charter runs through 2029, and then there are specific procedures for winding down at that point, depending upon what the financials show.
These cases that are in the pipeline are pretty expensive.
They can be.
They can be.
It really does vary a bit. At this point, most, as I said, very few of the claimants come into litigation instead of going into the VCF. There was when the VCF was most recently renewed, there was a period where they weren't accepting new claims because they had to rewrite regulations. So I think some folks might have gotten frustrated with the timing, and so now we have 2 new claims.
Actually, I think things are quite stable financially.
I think that's true, yes. I mean, overall, our we have investment income that's kind of ranging $2 to $4 million a year. We have operating costs that run about the same, and we've kind of, with the decrease in claims, the priority of the company has been to try to modestly enhance our investment income and bring our expenses down as low as we can, and with the goal of hopefully trying to increase the total assets available for insurance. But certainly the operations have been at a much lower level after we reached our mass settlement agreement.
Spoke to Duffy?
Okay.
He left a message. What happened?
And just to less, I think people who... let's say individuals who have pulmonary issues that may be related to 9/11, a lot of them go to some of the hospitals, right?
Yes, there is a federally funded provision for essentially free care for people who have ongoing health problems that they can trace to their exposure at the site.
Mm-hmm.
Okay, bye-bye.
So how do they come to you?
Claims that come to us generally are those that are filed as lawsuits against either the city or contractors who worked at the debris removal site.
I see. They go back many years, but they develop ailments. Okay.
Right.
I really have no...
I have nothing.
Nothing here, I think. Is there any... Michelle, go ahead.
Just a couple of quick comments. I noticed that in 15 compared to 16 and 14, you had a lot more of your investments in short-term. I was just curious if there was a reason for that based on something that you were expecting to happen or did, or it was just where you happen to be invested at the moment.
Part of going back all the way to 14, I mean, part of it might have been related to the fact that we had a reinsurance transaction where basically that had kind of gone to the 11th hour, and we had, in anticipation of that, had brought all of our investments to cash, essentially, to pay the premium for the reinsurance transaction. And then in the subsequent year, we started to reinvest those assets when it became clear that reinsurance transaction would not go forward.
And there is no talk about pursuing such a transaction in the future?
Well, certainly the company is open to whatever's in the best interest of our stakeholders, but the landscape has changed to some degree with the reauthorization of the VCF so that it's no longer clear that such a transaction is in the stakeholders' interest.
Right.
Kind of continuing on that, you have two outstanding claims against you, and you made reference, just want to follow through, that you think that they probably came about because of the delay in the other process. If that had been in place, your thought is because I'm trying to get a sense if you think there will be new claims brought directly against you. In the experience today kind of indicates probably not.
I would say that our experience since the VCF reopened has been that there have been essentially a handful of claims that are brought. Given the large number of different individuals who are making their own personal decisions, you can always anticipate that one or two people might decide that they prefer to go into litigation rather than to pursue an administrative remedy for whatever reason. It's all highly personal. So I wouldn't be surprised if we had a few new claims after these are resolved, but I would be surprised if we had more than a few while the VCF is still in
The
operation.
processing time for the VCF would be much faster to receive benefit than going through filing a claim.
Well, it should be, but sometimes it depends on how prepared the person is to deal with there's specific information that you have to have collected for the VCF as well. So it's depending on how organized the person is with their medical records and how quickly the doctors come forward with things.
I would think that the court claim would be even longer.
Well, sometimes with a subpoena, the medical providers act a little more quickly. So.
Go ahead, Michelle.
Just a comment on your MD&A. There are several places where you have only statements about the change, but not an explanation of, you quantified, but do not explain the change. I would ask that you think more of explaining some of the reasons behind the changes. I'm also looking at, specifically at footnote 2, but I think it might be smart to go throughout all of your footnotes with an eye toward eliminating a history lesson. You sort of start off note 2 with, that the company went back in 2011 to change its internal rate of return. I think in the year that you made the change, it makes sense to talk about the change, and maybe the subsequent year when you still have comparative statements. But other than that, I think you can just stick with what the current situation is, and there's a bit of that throughout. I think it'll just debulk some of the...
Okay, thank you.
Thank you.
Are there any other questions by the members of the committee? If not, thank you. I'm sorry it took so long.
No worries.
Please.
Well, we're honored to be here, and thank you very much for your time.
My pleasure.
Thank you.
The next entity is the TA.
With the typos. Next year they might be gone. They won't be gone.
He isn't as swift as this guy.
And I am on the audit committee of NYCHA.
Jill.
Let's go.
Okay. They're walking slowly. Morning, all.
Good morning.
And introduce yourselves, please. Who's Jill?
This is
You want to get her a little closer to them. No.
Okay. Morning.
Good morning. Could you folks introduce yourselves for the record?
Yes. Yes, I'm William Vazulis. I'm the controller of New York City Transit.
Jackie Ospina, Senior Director of Operations for TA, of Accounting for TA and Sertoa.
I'm Neil Brykoff, Director of Finance for Sertoa.
Maria Virgo, Director of Finance and Bookkeeping for Staten Island.
Speak into the mic. Go ahead.
Yeah, you can bring the microphones closer to you rather than
that's
leaning
all right.
in if you prefer.
Hi, Jill Strohmeyer, Audit Senior Manager with Deloitte.
Mike Cosgrove, Deputy Vice President, Paratransit.
Okay, I'm going to go over the financial statements for TA
ahead,
first.
sir.
Okay. New York City Transit ended 2016 on a firm financial footing with a surplus of $93 million compared to a surplus of $614 million in the prior year. While 2016 was a stable year, we faced a number of difficult challenges, including increased operating expenses and problems in the commercial real estate market that negatively affected portions of our funding. I'd like to go over the statement of revenues, expenses, and changes in net position on page 19 and describe the key items that affected our results. Revenue from fares was $4,415 million in 2016, an increase of $44 million or 1% from the prior year. The increase was due mostly to the annualization of the March 2015 fare increase. Ridership was $2,404 million in 2016, a decrease of $18 million or 0.7% over 2015. The decrease was a result of the effect of the fare increase, an increase in the use of motor vehicles instead of mass transit due to low gasoline prices available to customers in 2016, and the loss of bus customers due to increased traffic congestion in the city, which slowed buses, making them less effective at transporting customers. We are looking at ways of combating the problem of blocked bus lanes, including the possibility of mounting cameras on the buses for the purpose of generating tickets for vehicles parked in bus lanes, as well as the possibility of obtaining authorization for our Eagle Squadron staff who man the buses for ticket enforcement to be able to write tickets against these vehicles, which is something we've done many years ago. However, these steps in some cases require legislative approval, so we're not sure if we're going to be allowed to implement them at this point. So, total paratransit revenue and funding was $196,497,000 in 2016, compared to $208,500,000 in 2015, which is a decrease of $12 million. The $12 million reduction is due mostly to a reduction in the urban tax proceeds, of which paratransit receives 6%. Paratransit expenses were $467 million in 2016 compared to $462 million in 2015, an increase of $5 million or 1.1%, due primarily to increased transportation costs of $4.1 million, primarily due to an increase in the number of trips of 35,265 in 2016, going from 6,360,000 in 2015 to 6,395,000 in 2016. There's the increase of 35,000. Increases in the cost of insurance of $3.6 million due to rate increases and an increase in the size of the fleet, going from 2,018 vehicles in 2015 to 2,045 in 2016. An increase in settlements for paratransit-related legal settlements of $1.4 million, offset by lower fuel costs of $3.8 million. Going on to advertising and other revenue, it increased by $800,000, primarily due to increased rental income, offset by slightly lower advertising ad placements in 2016. Overall revenue increased by $32 million or 0.6%. Operating expenses increased from $10,045 million in 2015 to $10,650 million in 2016, an increase of $605 million or 6%. Within operating expenses, salaries and wages were up $98 million or 2.8%. Payroll increased as most represented and unrepresented personnel received wage increases in 2016, and headcount increased in support of various maintenance programs and operations requirements. Overtime expenses increased by 1.3% due mostly to maintenance requirements, unscheduled service, and vacancy absentee coverage requirements. Health and welfare expenses increased by $89 million or 12% due primarily to rate increases. Pension expenses increased by $247 million or 44.7% based on the most current actuarial valuations. Post-employment benefits other than pensions increased to $112 million or 7.5%, also due to the most recent actuarial valuation. Electrical power expenses decreased by $36 million or 12.7% due mostly to lower prices. Fuel expenses decreased $23 million or 23.1% due mostly to lower fuel prices. Public liability claims expense increased by $67 million, or 36.3%, due primarily to actuarial valuation update, which reflected an increase in major claims and the cost of claims. Maintenance contract expenses increased by $26 million, or 13.3%, due largely to the cost of purchasing an increased number of bus batteries to support our growing fleet of hybrid buses, increased costs of major structural repairs to buses in 2016, and increased cost of tires and tubes. Professional service contract expenses decreased by $41 million, or 43.4%, due primarily to the consolidation of these services into MTA IT functions. Materials and supplies increased $22 million, or 7.6%, due mostly to increased costs of repairing our aging fleet of fare card machinery, an increase in the number of fare card machines being maintained due to the addition of more select bus service routes, an increase in reserves for obsolete materials, and decreased revenue from sales of scrap in 2016. Depreciation expenses decreased by $91 million, or 5.2%, due to certain older capital assets reaching a point of being fully depreciated during 2016. Moving on to non-operating revenue, tax-supported subsidies from New York State increased by $235 million, due primarily to increased payroll mobility taxes of $145 million, increased mass metro taxes of $89 million, and increased petroleum subsidies of $1 million. Tax-supported subsidies from New York City decreased by $204 million, due primarily to a decrease in collections of New York City mortgage taxes as a result of a drop in the commercial real estate market activity in New York City in 2016. This trend toward decreased mortgage tax collections has continued into the beginning of 2017. However, it is luckily being offset by an increase in our receipts from that payroll mobility tax due to the improved economy in 2017. Triborough Bridge and Tunnel Authority support decreased $6 million due to increased debt service costs at TBTA, which offset higher toll revenues from increased traffic volume. Traffic volume increased from 297,900,000 vehicles in 2015 to 307,417,000 in 2016, an increase of 9,517,000 vehicles, or 3.2%. Overall tax-supported subsidies increased by $26 million. Skipping to capital contributions, there was an increase of $25 million in capital contributions due to increased reimbursements of capital expenditures funded by several sources, including MTA bonds, federal, state, and city funding. The net result was a decrease in the net position from a surplus of $614 million in 2015 to a surplus of $93 million in 2016. Moving on to the statement of net position on page 17. Under assets, cash in MTA investment pool decreased $211,321,000 from $583,173,000 in 2015 to $371,852,000 in 2016, while due from MTA and constituent authorities increased $182,295,000. The decrease in cash and offsetting increase in due from MTA and constituent authorities was primarily due to the timing of when we received cash from the MTA HQ. Materials and supplies inventory decreased by $17,333,000 due to increased utilization of materials in 2016 for repairs and maintenance of older models of subway cars and buses, and an increase in reserves for obsolescence in 2016. Capital assets increased by $1,228 million. The increase was due to additions of $364 million for stations, $397 million for signals, $160 million for buses, $85 million for subway cars, and $16 million for service vehicles, offset by depreciation of $1,645 million. As I've reported in the past, a critical part of our capital program over the past several years has been the implementation of CBTC technology to increase our capacity and improve reliability. This implementation requires the replacement and modernization of mainline signals, tracks, ties, and switches, a transfer of the control of the trains from local towers to the rail control center, and the purchase of CBTC-ready subway cars, as well as station improvements designed to improve the flow of passengers on and off station platforms. When used together, we can use the technology to control the interval of train arrivals in the station and keep the number of passengers on the platform to an optimal level for the offloading and onloading of passengers. Our purchases of new subway cars and buses that will break down less frequently than our current aging fleet And also, a key part of the plan was to improve performance by reducing the number of times that we need to take trains and buses out of service. With that goal in mind, we have begun work on a $774 million signal modernization and conversion to CBTC technology project for the number 7 Flushing line. This is the second line to receive CBTC technology, which is already in use on the L line. We are also in the process of reconstructing and modernizing the subway yards at our 2 main subway maintenance facilities in Coney Island and 207th Street. Work is ongoing at the main junctions throughout the system, replacing old switching systems called interlockings with CBTC-ready technology, and to consolidate management of them in our centralized rail control center at 54th Street in Manhattan. In Brooklyn, we've completed an $88 million renovation of 2 subway stations along the number 3 line, and work has begun on 3 additional subway stations on the R line with a cost of $72 million. We are also rehabilitating and repairing structural components on elevated lines throughout the system based on inspections by our team of engineers. We completed Phase 1 of the 2nd Avenue subway in 2016 and are currently in the design stage of Phase 2 that will extend the new subway to 125th Street. The second phase that will extend the new subway, the third Phase 3 would extend the subway to Hanover Square, downtown, maybe Brooklyn. The design includes the need to mine a wide sweeping turn at 125th Street that will enable the subways to safely maintain full speed as they pass through the curve. Subways are being done to determine the work that will be required to move existing utility lines in the way of the construction and to determine the depth required for the tunnels to avoid existing building structures. Another ongoing project is the reconstruction of the number 1 line Cortlandt Street station that was destroyed in the attack on the World Trade Center. The project has been hampered by difficulties gaining access to areas that are occupied by contractors working for the Port Authority who are behind schedule. The project is still scheduled for substantial completion in August 2018, but there's a possibility it may be delayed. The Sandy recovery and resiliency work continues on the $365 million reconstruction of South Ferry Terminal, which actually has opened just recently, so we're happy to now have that back. The work on the under-river tubes continues, with the L-train Canarsie tube expected to close in April 2019 for repairs for 15 to 18 months. Temporary repairs and redundancy have been made to the tubes to make them safe, but permanent repairs are needed. The work will entail a full reconstruction consisting of demolition and reconstruction of 14,400 linear feet of track and track bed, 60,000 linear feet of duct banks, 270,000 linear feet of cables and signals, repair to 7,000 linear feet of concrete lining, installation of new tunnel lighting and fire systems, building of a new discharge line, and the building of a new power substation that will support the CBTC technology. In connection with the project, we're doing extensive work on the First Avenue and Bedford Avenue stations to improve the efficiency of customer flow into and out of the stations. Resiliency measures have already been fully implemented at 9 stations and 1 fan plant in Brooklyn and Queens to prevent damage from future storms, including the fabrication and installation of both permanent and deployable methods of protection, which include mechanical closure devices, flex gates, watertight hatches, watertight manhole covers, and marine doors. I'm sorry.
We're a little tight for time,
Okay.
but I really appreciate all the effort that you go into the briefing and whatnot. I was just going to ask a question.
Okay.
If you didn't have all these tax-supported subsidies, what would the fare be instead of $275?
Well, that's a good question.
I would say double.
We would lose, we'd be short about maybe $1.6 billion
It's got to be like 550.
It would have to be much higher because when you think about it, we can talk about when we do our every increase we've done is the 4% has gotten us $400 million. So you'd have to increase it by.
I don't know if people realize it.
I think I saw something.
I said I did a little consulting once at the MTA on the pension funds, and I remember the chairman at that time. Not the for day-to-day operation, but the chairman of the board was Virgil Conway, and he says this is fine because that's what makes it public transportation.
Right.
Otherwise, I don't know what you would do. You need this viable transportation system. I was just going to ask one other quick question, turn it over to the group. why didn't they build the 79th Street station on the 2nd Avenue subway?
Well, that's
don't
a
know.
question I'd have to ask.
Of course, it runs from 86 to all the way down to 72nd. It's a pretty large run.
Yeah, that's 79th Street
And,
Station.
It would have helped, I think, but that's my own personal.
It's a good question. I can ask MTA Capital Construction.
Yeah, we can find
which is
out.
the engineers who did that work.
You talk about the bus congestion.
Right.
I've had occasion to go to the Upper East Side with buses. I have a relative that's ill there. And 3rd Avenue is a disaster. That's the only way I could put it. 3rd Avenue, I don't know how those buses get through. They're to be commended because you have the double parking of the trucks. You have what you said where people park in the bus lanes, which they shouldn't do. It's astounding. It really is astounding. And they do a nice job. We have handicapped people coming on.
Right.
How well they do that. They seat them. They make sure they're covered. So my compliments to to that. The other comment I have that's quick, you talk a lot about the capital plan in your report. Why not cut out some of the verbiage with due respect and do it in tabular presentation? I think that would be very helpful to the reader. I mean, I don't think people realize how much capital work is going on. And I think if the table was done creatively, you could even show the sources of funding. Do you know what I mean? And I think it would help a lot, each case. What capital plan are we in now?
This is the
2015 to
2019, 2015 to 2019.
2015, 2019.
That's right.
So they'll soon be presenting another plan.
That's right.
What is the composition of the Capital Review Board again? Do you know, sir?
No, that I don't know.
Okay.
I could find that.
They never approve it the first time. They have to lower it always. I'm sorry. I remember that for some crazy reason.
Bernie, are we allowed to ask questions
Go
now?
right ahead. Yeah.
I have a couple. You have, this is a comment on the language you have here, where you go through on page 12. They can't hear you. The language on page 12 goes through all kinds of economic situations, which I don't usually see in financial statements. Why did you feel it was necessary to put all that in?
I think the point of it is that the fact that the economic conditions have a lot of impact on how the financials turned out. I mean,
But that's true of anything.
And this is a management discussion, so we're giving a frame of what we think is important information for the user, the reader, user of the financials to get an understanding of what affected the figures that we're reporting and may affect future financial implications.
Okay, well, the city itself doesn't go into such length.
No, they do a very fine job on this.
So on that one. All right, now, more little things. There is the discussion, the emphasis of a matter. It's a component unit.
MAPSTOA, you mean?
Well, it requires significant subsidies from and material transactions with the City of New York. Is that something that should be in all of these things? We just finished another unit, and which needs lots of money, the Hospital Corporation, and it didn't have anything like this in the emphasis of matter. And it seems to me that the city ought to be consistent in that respect. Nothing wrong with it.
What page are you?
I'm on page 2. It says, in effect, it's saying, watch out, a lot of subsidies have to come, and if you really understand it, the city's financial condition is not such that it continue to do this thing, sort of thing. Shouldn't that also be in any other of these organizations that depend on the city's large S?
And this is
and Mr. Kaplan,
Speak into the mic, Jill.
this is something that your independent accounting firm, when they're providing their report on the audited financial statements, this is something that in their professional judgment they believe is something they should highlight to the reader, because without these subsidies from the state, the city, other bodies, as you mentioned, the transit authority would be at a large deficit.
So the same thing is true with the hospital corporation, isn't it? And it's not in there.
That's not her.
Yeah.
No, I'm just saying that if I'm a reader of all of these, they ought to all be consistent. And if you're right, then maybe the other accounting firms that are doing the other similarly situated enterprises should be asked to consider putting that language in.
Yeah, we felt it was important. Mr. Rosen, in his questions, asked what would the fare be if without the subsidies.
I don't mean to quarrel with the decision. Yeah. I'm just suggesting, I don't know who to suggest it to, but if we're going to have it in one of these units, we might want to have it in all.
Mark, I think you're on the MAPSTOA issue. That's kind of...
No, what I'm saying is, this is fine for MAPSTOA. Why isn't it in the hospital corporation then?
It's a good question, and if that's something that the committee wants the controller's office to communicate, we can ask.
I solicit anybody else's views about it. It was mine. It's not necessarily the committee's.
Then again, the housing authority, who's going to come to us in a little while, also has a couple of
same problem.
Same problem.
Yeah. So now
it's really gotten very complex. Of course, MAPSTOA is an old story. It was the old Fifth Avenue bus line. They took it over. They've done a great job. It was a pay-as-you-go system.
Full disclosure, I was the director of the bus company.
Yeah, no, it's fine. Sorry, no, but it's fine. I mean, now they're really putting it on an actuarial basis. They have for many, many years. But if you're hired as a MAPSTOA driver, you're in the MAPSTOA plan, which looks like nicest to the employee. If you're hired in another borough to be a bus driver, you're in the nicest plan. It's worked for years. I think here it's less complex than it is in health and hospitals.
And Mr. Kaplan, just to note that these are not component units of the City of New York, my understanding. So it is a little different. These are component units of the MTA and the State of New York.
No, I understand all that, and I don't want to overlabor the point. That's something the committee as a whole should discuss.
Yeah, I think it's something that we as a committee should talk about. We also should think about whether it goes in the auditor's opinion or someplace else, because I don't know that we want to start telling the auditor what in their opinion.
I open the question not with an answer.
No, but I mean, there might be another appropriate place to locate, like MD&A or something that we have more appropriate for us to suggest you put something someplace.
And then, just a tiny one. What's an interlocking?
That's a system that is the combination of where the switches come cross, when you have tracks that cross.
Oh, okay.
And what
I
it
just
is
didn't know what it meant in here.
It's not only replacing a track, but you have to replace the ties and the mechanism that moves the track from one to the other, as well as the signals. And all of that's controlled by either a local thing, So we're trying to get that centralized in the rail control center because you can watch it from afar. And the computer can control when these switches are happening. But say you take a subway out of service, you really do need to control that very well to get the train out of the way and then let the other trains go by.
Now, on the Triborough Bridge and Tunnel Authority, as somebody who trapped page 27, this is the maintenance of the bridges in the city. The Triborough is one. The George Washington is a more egregious example.
No, George Washington.
I know that. I'm just saying the maintenance, but certainly the Triborough, which I go over on a regular basis, the maintenance looks awful. The rust and everything else compared to maintenance in other bridges in other cities where somebody's paying more attention. And the Triborough Bridge is a moneymaker for the city, and the maintenance is just the layman's eye looks terrible. Am I right?
Well,
they can't agree with you.
I can't really.
Okay.
That's another agency.
It's a different
so
agency within MTA. That's not under our control, but but we can let them know that you would like them to
I will tell you something. I wrote a
improve.
letter to the two governors several years ago about the George Washington Bridge, having seen the Golden Gate Bridge, where they get to one end and they go right back and maintain it, and it shines. And I was told by some snip there that the governors would consider that the George Washington Bridge was well maintained. It isn't, Bernie. It's full of rust and it's disintegrating. You watch.
Well, then,
I guess,
and it's
I
important.
guess the bottom line is the infrastructure in New York is very old. And,
Now, one real question. On page 33, you refer to commercially insured funds on hand. What are commercially insured funds?
It's this one.
And yeah, this is cash in transit.
That's a real question.
Those are.
This is our cash in hand, and when we say commercially insured, we have part of a
Speak
risk.
into the mic, please.
Part of a risk assessment is we insured the cash that's on hand, like at the money room.
So it's the physical cash
Yes,
we're
physical.
talking about.
Yes, physical cash. Yes.
It's the physical
Physical
cash,
cash,
not like
at the
banks.
bank. No, not at the bank.
Okay.
Correct.
I see what it is. Okay. No, I know that one.
May I interrupt just to bring up one issue that I
What
think
was
is,
that, Michelle?
If I could, I would just like to discuss the restatement, which seemed like a rather significant element this year. Can you just give us a little more background on that?
Yes. The what happened this year was we had a couple of retirements in the operations accounting area, and we decided to restructure. So in looking at we took a good hard look at the capital asset treatment, and we identified two corrections that we wanted to make. First one was we had always used a very onerous process to identify when an asset had reached a point that it should be put into service and capitalized. We would take a project, look at all the contracts, review all the contracts, determine which status they were in, and many times we would find that we didn't have enough information to determine whether it was really at a point.
Right.
So what we would do in those cases is go to a computer system that we have, which is a customized system that is used to track the status of projects, and it's called PSR. And what happens is the construction managers are always entering information on a continuous basis in this computer system called PSR that you can determine exactly where a project is. So that was our way of falling back to find out if we were missing information. And after a while, we realized that we should just go right to PSR right off the bat. Why are we looking at going through? We could still look at the contracts, but we should start with the PSR system. And we wanted to make that switch, but to make the switch requires us to go back and correct the dates we had used previously. So just to recap, what we were using the system to supplement the review that we were doing in the contracts. We decided instead of doing that, let's go right to the PSR system. Let's use the construction manager information. It's readily available, it's very complete, and it's more accurate than trying to review contracts separately. So to make that change, though, you now have to go back and you have to revise the dates to be consistent. We were taking the date substantial completion out of this PSR system as the trigger to start depreciating its debt service. Because if it's substantially complete, that means that is a meaning to that it's pretty much ready to go. So to do that change, we had to go back and review all the previous dates we had used to capitalize and make it consistent through the years. Okay. So that entire change required us to in certain years switch amounts from construction in progress to capital asset, and the net effect of that in the 1 year was we had a $75 million we had understatement of depreciation expense in 2015 for changing that methodology. So it wasn't a huge amount. Our depreciation is 1.7 billion.
Was that just essentially moving things from work in progress into depreciable assets and then
Correct.
catch-up
That was the
depreciation?
change.
Okay.
Yes, that's all that is. And the other change we made is, as we were reviewing our assets, we found that in the past, right now we have a very good computer system for tracking our capital assets, but in the days before we had that system in place back starting in 2012, we had a lot of times when there were assets where we would have to issue credits against the assets. And because they're multi-year assets, it was very hard to attach those credits to the right asset when they started depreciation, and they missed it in some cases. We found credits that should have been attached. So as a result, we over-depreciated because we didn't reflect the credits.
Yep.
And the effect of that was, 26 million of overstated. So if you take the 75 million where we needed more depreciation, and you take the 26 million that we had less, it ends up with a $49 million net depreciation change in 2015. But it was really to correct these two things, clean up all of the credits that were missed over the years, and these go back
So
quite
you're
a
much
long
more
ways.
confident in the numbers now?
Yes, everything, now we're very, very clean. We've got it all under, right where we want it to
Right,
be.
and just to add also with the credits, like the good thing is when we changed financial systems back in 2011 to PeopleSoft, we now have a way, the computer, to track these credits detail level at the project. So that's how we know that we're
Good.
not. So all these credits were prior to that time, because once we moved to that system in 20, we're yeah.
Good. Can I just ask the auditors, did you do any review of their analysis, which they...
Yes, we did a significant review of the analysis and got comfortable with it. The situation was brought to our attention by management, and then we tested it both for accuracy and then also completeness to make sure that everything was considered.
Had you been aware of any of these issues before?
No.
No. Okay. And then just my last comment is, when the city restates financial statements, we often label them on the pages as having been restated. I was curious why you did not decide to do that.
No, I didn't think we were required to do it, so we didn't do it.
There's a materiality consideration. If you have a big restatement, we'd refer to it in our opinion. We determined that it was right to correct it to make things right, but it wasn't that material that it needed to go everywhere.
Okay, great.
You didn't have to restate in a formal way then.
Excuse me? Sorry?
This is not, would this qualify as a restatement?
It's we would call it an immaterial restatement.
Okay.
So things were changed, but it was not material enough to really call out in our audit report.
I guess the first thing is, are there any more questions of the members of the Transit Authority? Mr. Khan? Yes.
You mentioned in detail about the economics of our region, so given that we've had an extensive period of economic growth that, probably one of the longest periods we've ever had as a nation, that will likely come to an end in the not too distant future. What efforts are you making to anticipate that and to mitigate its impacts as far as your budget goes and planning for your capital program?
Well, at the present time, when we're looking at the payroll mobility tax has been hitting very high numbers because of the economic activity. I mean, as long as it stays somewhere where it is at the current time, we really don't need to change too much about the financing because we're getting money from the taxes that are sustaining us. However, in the capital program, that's funded by New York State. So we're always relying on New York State to fund us whenever we even fall short on some things. The governor is committed to making sure that we were fully funded for the things that we need to get done. So we definitely are reliant on them coming through for us. However, with that being said, we whenever we are short of funds, we do take steps to mitigate the loss of the revenue, including staff cuts and reducing our services as needed to do what we have to do. Obviously, we're in a situation now where everybody's very focused on us and the need to improve service. So, and the governor is committing to us that he's going to help us with those things. So I think we can help. We can count on his support. But we will always have to be as efficient as possible, and we have to take steps if things don't work out to offset the lost revenue as needed. So those things have to be done very carefully, because you obviously can't cut things without a lot of discussion and agreement.
Sure. I mean, the other thing you mentioned is in your comments that the decline in ridership, for example, is as a result of lower gas prices. Is that, I mean, couldn't it also be that people are just frustrated with riding such full subways, so that they're taking alternative forms of transportation?
Yes, there's kind of an offset. We see, the thing is that we've seen, like, the question is, will low gas prices continue? We've seen in this year that gas prices now have gone up about 50 cents from where they were during the time that we had in the financial statements, and we saw that ridership started to go back up again, because as soon as the gas prices go up and people leave the cars and go back to the subways and the buses, so there's an offset back and forth that goes on. But you would think that, of course, there's people get frustrated when the train is full. You can't get on the train. You're going to lose some of your passengers if they can't use it. We also have loss of revenue when we do a lot of systems work, because people can't get, because we have to take down stations and people can't get on the train. We lose our passengers then. What happened in this case also was that fare increase. Whenever we have a fare increase, we tend to lose some customers, but then we get them back. But then the next fare increase causes us to lose them. So there's the main thing is, the answer to all these things is that CBTC technology. If we can get that CBT technology in place where we control the train intervals better, and we also work on the station so that we can have the people coming in and out, the offloading and onloading can be kept so that there's not that many people. That'll make us be able to process.
That, but that's decades away, right? So
well, we're doing it on the change as we're making the Canarsie tube changes. We're also changing the stations to complement that, and we have a constant program of rehabilitating our stations, and every time we do that, we're going to be adding better stairways, better flow techniques. We have people working on the platforms now to help move the passengers faster, to try to mitigate some of those things that we get stuck where the train won't move because people are standing in the doorway.
Sure.
And it seems to be working in those cases.
So I have two very specific questions. On page 9, your public liability claims are considerably more in 2016 compared to, say, 2014. Can you explain what these claims are generally? Are these, and are there is there a frequency of certain actors where there's a greater incidence rate, for example, that you can do an analysis and then perhaps educate or mitigate?
No, this trend is really a kind of a conglomeration of all types of different times when somebody sues us for different things, and also workers' comp claims. So what happens is that when people are hit by buses, or there's, we have a difficult time now because the congestion leads to more collisions, which leads to more claims, and the awards that people are getting are higher than they were in the past, and for whatever reasons we're finding that there's more paid out on the claims per claim. And workers' comp claims have increased because our laws have been changed so that it's more favorable to people to go out on workers' comp than it was in the past. And of course are being much more lenient about what they consider to be an acceptable type of claim. So we're seeing increases in them. I think most people in industry are seeing that also. You're seeing a lot of higher claims. So the only thing you can do to mitigate that is to do what we're doing, which is we're looking at the buses and we're adding features to the buses where they actually have a sounding alarm when the bus is coming and somebody is within a proximity of it to give them an alert. And it also, we're doing driver training where drivers are learning how to drive better and to avoid collisions and how to do a better job of avoiding these claims. And so the design of the buses can help, and the training can help. But unfortunately, there's kind of we're fighting against a battle here, a losing battle of what the legal system as it is.
And the last question was on expired on page 8, the expired fair media revenue. What is the? Can you explain what that is? Is that?
Yeah, that's what the call.
Yeah, that's when a person leaves a balance on their fare card, and then they don't re-up on that fare card to add some fares money back onto it once it's reached there and the card expires and they can't continue it. Yeah, that's exactly what it is. Yeah.
Okay, thank you.
That is cheats, doesn't it?
Are there any more questions? Are you going to do SATOA as well?
Yes.
Jackie.
Yes.
Yeah.
Jackie's being
All right, let's
called.
quickly
I'll give
get
you
to
this
SATOA
one
then.
with little
Try to be quick.
I know. I think.
You want to?
Go ahead.
Okay. All right.
I mean, rather than go through all the items, we are a little pressed for time.
Do you want to go
The
through
only
questions?
thing I was going to ask you was you show a large receivable from the city. There's been an agreement on funding the deficit for SATOA?
Right, that's correct. So there's the way it works is for example, the 2016 is an estimate because we billed the city obviously after the year end. So that 59 was an increase estimate that was sent. It's sent sort of like a forecast where we think we're going to be when we send the bill for the prior year. So around the summer, like around August, MTA on behalf of SATOA will send the actual, subsidy or bill for 16, and then at the same time we'll send an estimate for 17.
Because there were a lot of years where they stopped, right?
That's correct.
But they've now...
Yes, back, I think that the city started funding the operating deficit again in the year for the calendar year, for the fiscal year 2012.
Okay.
2012, yes.
So that's helpful, I mean.
Absolutely. Absolutely, yes.
And are you building turnstiles on all the stations or not?
Maria, I'm going to leave that to you. I don't think so.
I don't think so. I think they did an analysis a couple of years ago that they said the cost of actually installing turnstiles.
So if somebody wants to go
it just defeated the purpose. We would never really regain all those operating expenses in terms of revenues.
I think that was the city's argument for cutting the subsidy. I mean, there's a turnstile at one end, a turnstile at the other end, but in the between.
Yeah. Correct.
All right. It used to be the old Baltimore and Ohio Railroad, folks. I remember I had a friend many, many years ago who applied for a job, but it was too far away to do payroll.
Does anyone have any other questions?
It's a line that just goes straight. There are no trunk lines. Mike, you're a resident of Staten.
Statenville to St. George.
Correct.
Yeah.
Right.
It's the subsidy. For
And everybody
Republicans
gets
on
off before
Staten
St. George and they don't pay. Right.
Over for Tompkinsville. Right.
I think we really have to get to the Housing Authority. They've been here a long time. I want to thank you for detailing all this stuff.
You're welcome.
Thank you.
Very informative. Thank you.
Thank you.
Okay.
That's some pipe, a little bit.
If you let 'em-
hammer and otherwise, you can have it.
Okay.
Thank you.
I got it. The Housing Authority. So the technician is staying?
I don't know. It's not decided.
All right.
Mark, you want any?
Here?
D3.
Here next to it?
No, we
Okay.
have to. We have to do it. I know that. I didn't know the Loyalty Land Housing Authority. D2. They started recently. Yeah.
No.
Stylus.
Yeah, stylus. It's a special stylus, though. It's used, it's You can only use this. You can't use anything that happens to be soft. Ah, okay. Oh, so you can't just use a regular stylus on an iPad? I think you can. I think you can. Perfect.
Me. Right here? I don't know how many there are. Here? One more. So that Danny can sit next to me. We'll sit here.
I apologize for the delay, folks. It's just been a lot.
No,
It's
that's
been a big
okay.
agenda.
We're fine.
No worries.
There's one seat here.
A lot of questions. See you guys again.
Too hot.
Could you quickly introduce yourselves for the record so they could...
Jackie. Certainly. Good morning. I'm Karen Caldwell, Chief Financial Officer for the New York City Housing Authority.
Morning.
Hi, I'm Danny Freiberg, Deputy Director in the Accounting Department.
Tricia Roberts, Director of Internal Audit.
Good afternoon, Brian Clark, Senior Vice President of Operations for Property Management.
Greg Koslow, Audit Partner, Deloitte.
Jill Strohmeyer, Audit Senior Manager with Deloitte.
Okay, and we have one more.
Could you speak up a little bit?
Sorry. Lana Civic, Assistant Director for Treasury within NYCHA.
All right. So, again, good morning, Audit Committee members. I am Karen Caldwell, CFO of NYCHA, and I'm here to present the audited financial statements of the New York City Housing Authority. The financial statements include the financial results of LLC-1 and LLC-2, which are component units of NYCHA. All of the financial statements are prepared on the accrual basis of accounting and contain management discussion and analysis, basic financial statements consisting of the statements of net position, statements of revenue, expenses, and changes in net position, statement of cash flows, notes to the financial statements, and required supplementary information. During 2016, the authority loss before capital contributions for 2016 was $411 million. The leading factors in the $451 million unfavorable variance as compared to 2015 were as follows. An increase in the other post-employment benefits of $316 million, due primarily to a change in mortality assumptions and the absence of actuarial gains from the prior year, which we had experienced last year because of lower than expected premium increases. An increase in maintenance operation costs of $88 million, mainly due to initiatives to improve services and safety to residents, such as work order reduction, exterminating, and tree pruning. A reduction in subsidies from the City of New York of $64 million for items such as collective bargaining, general wage increases, homeless programs, and general services, since certain amounts received in 2015 were non-recurring amounts. For the year ended December 31, 2016, the authority's cash and investment position increased by $80 million, largely due to the proceeds from the Rental Assistance Demonstration Program, or RAD program, and the equipment purchase lease agreement to finance the energy performance contracts. Both of these programs are explained in more detail in the financial highlights and analysis contained in the management discussion and analysis. And with that, I will open it up to questions.
Thank you very much.
Just for the record, I'm recusing myself
Yes.
because
He's a member of
I'm
your
a
board.
member of the audit committee.
Yeah.
Yes, you are.
Okay. Walking away from the regular financial statements, if you will permit me, I like very much your demographic and economic information. And in the past, I think you used to show how many people, or the number of persons, or the number of households that depended on the Section 8 financing, not your own, and this year you didn't do it. Do you have a statistic? How much do you Section 8?
I believe we have 85,000 vouchers on the street, and I think it represents about 200,000 people.
Oh, so that sounds similar to prior years.
Yes.
Yet the population in your own facilities diminished a little bit. They declined slightly.
Yes, and that's because we had a few, RADs, a few dispositions through RADs and so forth. So as we've shifted the portfolio slightly.
Okay.
I'd just like to point out on page 153, there's actually a chart on resident demographics for our, Section 8 program.
You have the Section 8 here?
Yeah, it's on page 153.
I'm at 153. Where would it be, sir?
It's called Resident Demographics Housing Choice Voucher Program.
Oh, it's included in there?
Yes.
It's included in the 84,840?
Yeah,
Correct.
Oh, I see. All right, fine. And if the current administration at Washington had their way and they did the budget that they want to do, it would be devastating, right?
It would be devastating.
No. Most of your revenue is federal CD revenue, right?
Correct. So the authority, without looking at the numbers, but essentially we get about $1 billion in tenant rent, $1 billion that comes into us to be paid out to Section 8 landlords, and the other $1 billion comes in from our federal subsidy, just in round numbers. And then we get a little bit of money, few $100 million coming in from other, which is mostly New York City.
Unlike anybody else who's been on that side of the table, I can tell you that this organization has a functioning audit committee.
No, because you're on it. Right.
Thank you for stating
Those are
that.
fighting words.
Do you have anything to do with that?
Go ahead, Michelle.
Actually, I just wanted to speak with you a little bit about the timing of your audit and financial statements. I know that we had a little bit of a glitch, maybe not a glitch. It was difficult for us to get your statement. It was difficult for you to get us your statements in time for this meeting, and I'm just curious, especially because this year I think you're here a month later than you usually come. I think you're usually on the... Okay. Oh, okay. So I'm just curious as to the timing of your own internal audit meeting and all of the dynamics that get your financial statements. It is 6 months later.
Right. Well,
Go ahead.
So we had a few meetings. We started.
Speak into the mic, please, Dan.
Yes, thank you. We started meeting in, I believe, April, where we did the draft, where we started giving that out to Deloitte, and going back and forth. In that perspective, we actually presented them to the audit committee. They had questions, and in that we, reached out. We kind of addressed up if there was things that weren't clear. We had another meeting again in May for further clarity, and to also in June to make sure that we've addressed all aspects so that it could be presented to our internal board. We presented the financials this morning. Karen Caldwell did this morning to our internal board, of which they accepted it based on the audit committee's recommendation, and that's why we're here today. So it was basically moving through the process and making sure that everyone is very well informed of what's going on, getting Jill from Deloitte to give us feedback if there's any areas. So it was more of us taking a very extensive stance on making sure that we're dotting all our I's and crossing our T's.
Do you think that process can be consolidated a little bit next year so that you're not right up against the deadlines here?
Absolutely, we could definitely work towards working that out. I mean, some of it was our our board meeting that was on the same day as today, so we were kind of moving back and forth.
Right.
But moving forward, we'll definitely take that into consideration.
Yeah, if you could strategize with the board to make sure that happens, say a week in advance or so, just so that there's not the same problem. But thank you.
You're welcome.
Appreciate it.
When you did that, I like round numbers, especially for government work. It's appropriate. I really mean it. Within the subsidies and grants of the $2 billion, $1 billion of that is the CD block grants, and the other $1 billion?
No, so $1 billion of it is Section 8 So we get the Section 8
Okay, I got
landlords
it.
in there.
Section 8
Right, correct.
would be a disaster.
Right.
Be a disaster.
So one of the things that we always hear about are the backlogs of maintenance work, and certainly there have been lots of reports from the City Controller's Office and others. Can you just give us some idea of how those are being addressed? I know it's not directly financial statement related, but...
Yeah, so the certainly the backlog is related overall to our financial condition, and with the last needs assessment, which we're going through a current needs assessment, and it's probably going to be much higher, but we have a $17 billion capital need. All of that will affect extending useful life of different things that need to be replaced in a timely manner. So that's going to contribute to operation and maintenance challenges. But regardless, we can't just throw up our hands and say, we can't do it. We have to keep on. So the currently our backlog on work orders is approximately 147,000 work orders, which has remained pretty flat over the past year. It's been pretty steady state. We have seen a shift in some of the work orders. We are getting to routine repairs very quickly. We're down below 5 days in a service level. Just the more complex repairs, which are more challenging for us. These involve skilled trades. If you looked at our largest outstanding work, it is in painting, and it's probably about somewhere around 45-50% of our work orders are related to actually painting of the apartment units.
Is that all done in-house, or do you?
No, so that's so it's a mix. So we have we have skilled trade staff, in-house staff, and then we also have contracts. We use vendors for painting, floor tile, various other repairs.
Thank you.
You're welcome.
It used to be that you had your oil tanks sunk in the ground, the storage tanks.
Yes.
And they were remediating them because they could leach into the soil.
Correct.
Has that been completed, or it's still?
No, so that's an ongoing program, for our underground storage tanks. So the fuel oil tanks, the leaking tanks are considered a spill, and you have to have we have to report it to the state, and we have to work with the state on the remediation. The remediation can take an extended period of time, many years, even decades, depending upon the size of the spill and the location.
It would be too expensive to go to gas-fired boilers, or you're going to that?
No, so the majority of our sites we're on firm gas. That's the majority. A lot of our properties we do have dual fuel capability. Very helpful for us when Sandy occurred. Because there was an interruption, in gas supply, so we were able to convert two oil tanks, to oil.
Number two, or the gas.
Yep.
Yeah. On those subsidies again, I mean, I like that. I would put a footnote on that and discuss it in the notes, because it's so important. Do you know what I mean? It's for the future. But well done that way.
Thank you.
How do you periodically you increase the rents?
Had a couple of years ago basically raised the rents on tenants by saying that anyone who wasn't paying 30% of their income, they would raise the rents to that amount. And they did it over a couple of years to phase it in, but it has resulted in higher tenant rent.
And a higher rental income, right?
Higher rental income, but it's been a strain on our tenants. We have higher delinquencies as a result of it, because it's just more difficult for people to pay.
Yeah. You can't help that. Many years ago, I was in the Office of Management and Budget, and we had a budget director who had sold housing bonds in a previous life. He was there a few years. It was Don Kummerfeld, Michelle.
Yes.
And he said that this housing authority compared to all the others at that time, was without question the best.
Okay.
I don't know if that's true yet, but I
We
hope
think
so.
it's true.
I think it is. It's a tough business. It's a tough business in a big town where there's a lot of homeless, a lot of demand for alternative housing. I don't know what the answer is, but you just got to keep fighting and pushing. That's all.
Yep.
Go ahead, Mr. Khan.
Thank you, Mr. Chairman. Have you, as the temperatures are getting warmer, have you looked at the water towers and, Legionnaire's disease and ways of mitigating that risk to the tenants?
Yeah. So the cooling towers, we do not have many, but we do have some. I believe the count is less than 10, but we comply with the Legionella requirements here in New York City. So we do the annual cleaning as well as the periodic testing.
Okay. So on page 125, under your operating expenses, there's a decline in the rent for leased dwellings. What processes are in place that contribute to this declining, decline over the past 3 years, from say 966 to 940?
Yeah, I see that. Right here. I think that's attributable to a reduction in the number of units in the program.
Okay.
Over those years. Yes.
So how many fewer units do you have? I mean, just approximate. I'm not
I think it's about 2,000 units. I think we've gone from 178,000 to 176,000.
Okay. I mean, I raise this because I know there are some advocates who've expressed concerns that NYCHA is warehousing units, so to speak. And I mean, I haven't met with NYCHA to discuss that in particular, but it was just something to ask. We wanted to ask. So that's not the case?
Yeah, that is absolutely not the case. There are units that are off the rent roll. It's a relatively small number. These units are off for a variety of reasons. One could be because of significant repair that's required. Other is because of alternative uses. For example, developments were constructed without a management office. We had to convert an apartment unit to a management office, or to a community space, or a police facility.
Okay,
but the number that are off the rent roll is, I think it's right around like 1,000 units. There isn't. We aren't. It's actually available on our website. We aren't warehousing units.
And the last question actually related. I believe it was the Comptroller's office, right? Maybe it was the U.S. Attorney's office that was looking at the supplies that NYCHA contracts and the controls over the management of those supplies and what you have in store and what you don't have available, where it's available. Have you improved your oversight and accountability over what supplies that you have acquired, what furniture, what other items there may be, in order to better inventory what you already have with regards to purchasing?
So as a result of that audit, we actually put together a working group, which included a member from the Comptroller's office that was part of it, to look at our overall program for how we are, our inventory and tracking and et cetera. I think it's been pretty successful. Partnership. The working group we've been able to do a couple of things. One was that there was material that over the years had become obsolete, and so we were able to inventory it, and then also where we could sell it, and we reduced our satellite our satellite warehouses. So we did a consolidation. And then we also, for day-to-day management, we do have an electronic inventory program that we're using for our most used items inside apartment units for repairs that we launched within the last year. So we've actually made a lot of good progress in that area and followed up on a lot of the recommendations from the working group.
Sure, that's great. And that also reduces the amount of time it takes to make repairs and everything else because you know what you have.
Yes. Also to that, we've been providing quarterly updates to the Comptroller's Office in reference to implementing that corrective action plan and where we're at in terms of percentages, how much we've moved the needle. So internally, Audit has been looking at how far we've moved the needle, where do we need more help, where there's considerations, where, relative to the constraints financially, how much we can do. So we are keeping a needle on that, and we are providing that information to the Comptroller's Office on a quarterly basis, and internally to executive management as well.
I was just going to say, again, in one of your statistical sections, it was late at night when I looked at it, I think you have some very large apartments with just one elderly resident, children married, people have passed on. You try to get them to move, or it's pretty tough. You can't. You can't. It's a free country. They don't want to move. They don't move.
Right. Brian, you want to talk about the move?
Sure. So we've we have a large number of units that are under occupied, as well as we have units that are overcrowded. Families are getting, so we have actually a far larger portion of folks that are considered to be underoccupied versus overcrowded. Families are getting smaller over the years. The difficulty that we have is that we have such low turnover. We turn over, our vacancy rate is less than 1%, right around 1%.
And your waiting list is tremendous.
And the waiting list is tremendous, and we do have a rotation where we have 3 out of our 5. So when you have a rotation, an apartment becomes available, it goes through one of 5 lanes, and it's rotating. 3 of those lanes are for transfers, 2 are for new applicants. And within the transfer lane, you have folks that are underoccupied. Then you have a lane for overcrowded, and then you have for emergency transfers. And then for the applicants, you have need-based, and then you have working families. The right sizing, as we call it, is very very challenging. We tried an incentive program for that, but unfortunately, we didn't get the success that we needed. And really, the limiting factor is the fact of the turnover of a unit. So it is a challenge. It's not something that is specific to New York City Housing Authority. A lot of public housing authorities have a challenge in this.
Country, I guess, yes.
In this area.
If there are no more questions on the statements, there is a management letter we ought to. I don't think it's very serious. Did the auditors? No. Nothing really here, Jill?
Nothing of importance to note, I would say, and we agree with management's responses, and they agree with the comments, so I think we're fine.
All right, if that's it, thank you all for your patience and a good job.
Thank you.
Thank you.
Thank you.
Yeah, no executive session.
Sure. Yeah.
All right, could I entertain a motion to adjourn the audit committee meeting?
Second.
Okay. All in favor? Aye.
Next to number